What if I told you that what's coming next is not just a recession, not just another economic downturn, but something far more disruptive, something that could change the very foundation of how society and the economy function? Most people are still trying to recover from the last crisis, still believing the next one will be a repeat of 2008 or 2020. But economist Richard Wolff is warning that the storm forming on the horizon isn't just another financial cycle. It's deeper. It's structural. And if you don't understand it, if you don't prepare, it could erase decades of progress in your life, your wealth, and your future. The truth is, most people are sleepwalking through the economy, blindly trusting that things will eventually go back to normal. But here's the reality. Normal is gone. And what's coming is worse than a recession. It's a transformation. Let's start with a fact that should shake you. Over 60% of Americans today are living paycheck to paycheck. Household debt has hit an all-time high, surpassing $17 trillion. Credit card debt alone is over $1.3 trillion, and delinquencies are rising faster than they did before the 2008 crash. At the same time, corporate profits are hitting record levels, and the wealth gap is the widest it's been since the Gilded Age of the late 1800s. Does that sound like a healthy system to you? Or does it sound like a system that's about to snap? Wolff's warning isn't based on fear. It's based on data and history. He points out that every major economic collapse in history wasn't just about money. It was about systems reaching their breaking point. And right now, the system we're living in, capitalism in its current form, is showing signs of deep internal strain. The rich keep getting richer not because they're working harder, but because the system itself is designed to funnel wealth upward. Meanwhile, wages for most workers haven't kept up with inflation for over 40 years. People are working harder, producing more, and yet falling further behind. Let's break that down simply. Imagine you're on a treadmill. Decades ago, that treadmill was slow. You could walk at a comfortable pace and still make progress. But every few years, the treadmill speeds up. Inflation rises. Costs of housing, healthcare, and education go up. But your paycheck? It barely moves. You're running faster and faster just to stay in the same place. And for millions of people, they're starting to trip. This is why Wolff says the problem isn't just a coming recession. It's a crisis of inequality, of corporate power, of political capture. When the majority of people in an economy can no longer afford to participate in it, the system starts to eat itself from the inside out. And we're watching that happen in real time. Look around. Homelessness is rising in every major city. Young people, even with college degrees, can't afford homes, can't pay off their student loans, can't even start families because they're buried under debt. Retirement is becoming a fantasy for older generations. And while all of this is happening, the top 1% control more wealth than the entire middle class combined. This isn't a bug in the system. It is the system. Now you might think, okay, but we've seen recessions before. The economy always bounces back. And yes, recessions are part of the economic cycle. But here's the key difference Wolff highlights. Previous recessions were cyclical. They were like storms that pass, and the sun comes out again. What's forming now is structural. It's like climate change. It's not just a bad storm. It's a shift in the entire weather system. Here's a simple example. In the 1950s and 60s, when America experienced a recession, it was painful. People lost jobs, markets fell, but there was still a strong middle class. Wages were tied to productivity. If the economy grew, workers shared in that growth. Companies reinvested in their employees and communities. But since the 1980s, that connection has been broken. Productivity kept rising, but wages flatlined. Instead of reinvesting, companies started buying back their own stock to inflate prices. The wealth created by economic growth was captured almost entirely by shareholders and executives. So now, when a recession hits, it's not just a temporary setback, it's catastrophic for ordinary people. Because the safety nets are gone, the savings are gone, the bargaining power is gone, and the system is too fragile to recover the way it used to. Wolff warns that this fragility is exactly why the next crisis will be worse. It's not going to be a simple market correction. It's going to expose the fundamental weakness of a system that has been hollowed out from within. And when that happens, governments will have two choices: double down on the same failed policies or reimagine the system entirely. Let's talk about one of those policies: money printing. After the 2008 crash, the Federal Reserve printed trillions of dollars to stimulate the economy. It worked, sort of. It prevented total collapse. But most of that money went into financial markets, not into the real economy. Asset prices exploded: stocks, real estate, luxury goods, but wages barely moved. The result? The rich got richer and inequality deepened. Then, in 2020, during the pandemic, they did it again. Only bigger. Another tsunami of printed money. And again, it flooded into assets. Now we're living with the consequences: sky-high inflation, unaffordable housing, and a currency that's losing purchasing power by the day. This is why Wolff says the next downturn won't be solved by the same tricks. You can't keep printing money into a broken system and expect it to magically fix itself. At some point, the entire structure begins to crack under the weight of its own contradictions. And those cracks are everywhere. Social unrest is growing. Political polarization is at an all-time high. People are losing faith in institutions, in government, in media, in the financial system itself. And when trust collapses, markets collapse, economies collapse, civilizations collapse. But here's the key. Collapse is not the end. It's a turning point, and that's where Wolff's warning becomes an opportunity, if you understand it. Because while most people panic during crises, a small percentage use them to build generational wealth. The difference? Preparation and perspective. So how do you prepare? First, understand the difference between assets and liabilities. Most people think buying a big house or a fancy car makes them rich. It doesn't. If it's not putting money in your pocket, it's a liability. Assets, like rental properties, dividend-paying stocks, businesses, or even certain commodities like gold, generate income and hold value even during downturns. That's where your focus needs to be. Second, diversify. The era of putting all your money into a 401k and hoping the market always goes up is over. Inflation, currency debasement, and geopolitical risks mean you need exposure to multiple asset classes: real estate, commodities, cash flow businesses, and yes, even alternative investments like cryptocurrency, if you understand the risks. Third, invest in skills and knowledge. In times of economic transformation, the most valuable asset isn't money, it's adaptability. People who can learn, pivot, and create value in a changing world don't just survive, they thrive. And finally, pay attention. Don't tune out the headlines. Don't ignore the warning signs. Economic literacy isn't a luxury anymore. It's survival. Understand how monetary policy works. Understand how debt markets work. Understand how wealth is created and destroyed in the real world. Wolff's message isn't meant to scare you. It's meant to wake you up. Because what's coming is worse than a recession. But it's also a chance to rethink how we live, work, and build wealth. The systems we inherited were built for a different world, a world that no longer exists. If you cling to them, they'll drag you down with them. But if you adapt, if you learn the new rules of money, the new realities of power, you can come out of this stronger than ever. Think of every great shift in history. The Great Depression of the 1930s created millionaires who bought assets for pennies on the dollar. The stagflation of the 1970s birthed new industries and investment strategies. The 2008 crisis gave rise to the tech boom and unprecedented wealth creation for those who saw the opportunities. This moment, as dangerous as it is, will do the same. The question is, which side of history will you be on? Will you be one of the millions caught off guard, crushed by debt, panicked by headlines, waiting for the government to save you? Or will you be one of the few who saw the writing on the wall, took control of your destiny, and used this moment to build a future no crisis can take away? Richard Wolff's last warning is not a prophecy of doom. It's a call to action. A recession is a storm. What's coming is a shift in the landscape. And while most people will be trying to rebuild the past, the future will belong to those who are ready to build something new. So don't wait for permission. Don't wait for certainty. The signs are already here. Prepare your mind. Prepare your finances. And prepare for the reality that the next chapter of history will not be written by those who cling to the old way, but by those bold enough to shape the new. Because the truth is simple. What's coming is worse than a recession. But if you're ready, it could be the greatest opportunity of your life.